Good afternoon, everyone, and welcome to the video update. This is actually my second version of this. I think you guys saw the other one. I forgot to turn the sound on, so here I am doing it again. Hopefully this version will be even better. I decided to get this video out of the way. It was a brutal week on Wall Street, but I see a lot of positive signs when I'm going through the charts today. And we're just going to jump in right now and check out the Dow Daily. Now you can see we busted through the 200-day moving average on Friday on really heavy volume. We did that previously back in late November, and then we ended up making new highs. So this Dow chart is suggesting a big bounce. It is deeply oversold, as we know. One of the big things that happened on Friday, of course, was options expiration. It was the second largest options expiration ever. I believe the number was $1.3 trillion. You saw the crazy action going on out there, the big moves up and down throughout the day as the option brokers did their best to make sure the most options, most calls, and most puts expired worthless, which is why options are a game that the brokers are the winners 99% of the time. That's one of the reasons I think options are not for most people. But that's a whole nother thing we can talk about down the road. Looking at the Dow chart, you can see this here. Looking at the Qs, we broke through that support on the Qs and we blew through that 200-day moving average like it wasn't there. And remember, like last year, supports are supports as long as they're supports. And in a market like this, there is no such thing as a bottom. There is no such thing as supports. Just like last year when the indices were making new highs, there was no such thing as resistance as we kept breaking out and making new highs. It's actually been a year almost since that GameStop AMC fiasco. And I call it fiasco because the brokers got squeezed, congressional hearings. Meanwhile, a year later, we're seeing the exact opposite happen. Heavily concentrated shorting throughout the market. If the indices uptick a little bit, most stocks are dead. If the indices downtick a little bit, we've got Armageddon in most stocks, and they just get destroyed with shorting, bids getting pulled, etc., etc. No hearings about that, though. Supports are getting blown out right now. We look at the SPY chart. Here is the SPY weekly chart. We've got pretty strong support just below the 50-day moving average. If we go back and look at the daily chart, we broke through the 200-day moving average on Friday, but we are really, really oversold on all the indicators in case you didn't see that. And when we see the kind of nonsense with these options expiration things, there is usually a relief rally shortly thereafter. But I'm going to show you a couple of charts that I only pull out when the market's doing things like this. And the first one we're going to look at is the McClellan Oscillator. You can look up exactly what it is, but my motto is keep things simple. Readings up here, 50 and above, is extremely bullish and means we probably have downside risk. On the other side, the flip side of this, a reading down here in approaching the negative 90 level, that is extreme pessimism, extreme negativity. And what usually happens when everyone goes to one side of the boat, we see the opposite happen. Now, typically we have seen very strong supports at the negative 50 level. And like back in November, we are way down there in the negative 88. I think we almost breached the November low on this one. What this tells me is we are likely to have a pretty big rally, I would estimate, in the next few days. It could be a one-day rally or it could be 5 days or more. Now, I did mention a little bit of this in the room on Friday, how I expected a bounce this upcoming week. But the reason I didn't do a whole lot of shopping other than picking up Disney on that nonsense, and I'll get into that in a little bit, is you just never know. We have a major geopolitical risk overhanging the market out there, i.e. Russia, Ukraine. Now, the problem with a Friday weekend market setting up to bounce next week's outlook, you never know what kind of news could float out here tonight or tomorrow before the markets open. And even though things are deeply oversold and ripe for a large bounce, any kind of geopolitical news that is on the negative side will just blow the supports out of the water, and there'll be a sell first bias on Monday. If not, we'll probably see the normal gap up crap that we've seen over and over again, and we'll see a lot of big bounces out there. FUBU. This is a stock that they actually grew their subscribers numbers. But again, like Disney, got hammered on Netflix destroying the market on Friday. Now, the market was probably going to be down big on Friday no matter what, just because of the size of that options expiration. So these casualties here, we're probably going to see this kind of downside move anyway. We at least found some good support at the $10 level. A near-term bounce, 10% move would take it up to the 50-day on the 15-minute chart, 1120. Nothing to shake a stick at. Here's the daily chart on FUBU. Bounce up. 14 to 15 would be a really nice bounce, especially on a sustained tech short squeeze move. Now, one of the things regarding the market, there is a lot of negativity out there, and we'll actually go back here to the put-call ratio. A lot of negativity out there, and if you look around on social media, you're going to see a couple of common themes. You're going to see a lot of traders just going, I'm done with this crooked market, I'm out of here. And the other talk, either than shorts are killing everything, is, you know what? Everything keeps going down. I'm just going to short. And you've got a lot of rookie shorts in this market, especially over the last couple of weeks. You guys know my feeling on that. I don't like to short. I think you need a special negative type of mindset to be successful at shorting, and it's not something I want to even, jump into. And B, I strongly believe that you've got to be able to trade stocks successfully for a number of years before you even go over to the dark side of shorting. Shorting, your risk is unlimited, at least on the long side. If you put $1 into a stock, the most you can lose is $1. If you short $1 in a stock, you could lose exponentially anything until you cover said short. But there are a lot of shorts in this market now, and just like they hammer things right back down, when it reverses, you see those robots flip to the other side, and those squeezes can be very, very big. DraftKings, heavily shorted stock, just getting beaten over the head. Now, one of the common themes with a lot of these tech stocks getting destroyed is ARK favorites, ARK and meme type stocks. And, Kathy Woods posts her buys and sells every day. I think that's a mistake, to be honest, because she's given ammunition to these short funds who don't have to disclose for weeks. I mean, look at this S3 short data that gets posted all the time on social media. You got to pay thousands of dollars for that to get up-to-date short interest information in this day and age, when most of us have to rely on data that's days and weeks if they even update it. Just ridiculous. But when it turns on these kinds of stocks, the bounces can be fast and brutal for shorts and fast and very nice for longs. 20-day EMA is at $25. That's a 25%, $5 move near term on a rally. Disney, stupidness, especially on the whooping it already took. Not a surprise. We already knew this news, but I couldn't resist. Picked up some more shares down here. Substantial, so oversold, but can always become more oversold, as I've said before. 20-day is 144. The ads I did on Friday, I would be looking for a $5 to $7 move. 145, 147, reevaluate. Deep oversold here. Last time we saw this kind of oversold condition on the stock, over the course of a few days, it gave a nice $5 move. I'll take a $5 move in Disney all day long. Lucid was actually very, very strong during the market sell-off recently. Now, there's a lot of chatter about the lockup, expiration, et cetera, but, when you've got shorts piling into every tech stock, you're going to hear every piece of negative news there is on a stock. Any kind of squeeze move in techs this week, this is probably a $41 to $42 stock, which is a nice little bounce move. Now, right now on these stocks, I'm just talking about some of the large cap stocks. Like I said, I didn't pick up anything on Friday because who knows what the news is, but this 1 to 5 day possible big rally should bring a lot of bounces in stocks. You'll start to see the larger cap hammered short plays first, and then that money will rotate out into the rest of the market, hopefully, if the plan comes together. SDC, this was a stock that had a huge squeeze move about a week ago up to 260. It's sitting here at $2. 20-day EMA is at 227. That's a 25-cent move. Nothing to shake a stick at. That's a nice little return, 25 cents in, possibly a day or two with a nice move in the market. The other one I'm just going to mention, really the only small cap one right now, is KPRX. This was a monster January popper into the end of the year. Came all the way back down, looked ready to rock and roll again, and then the bids disappearing in the market and shorts coming into stocks got beat down on Friday. You'll see this on a lot of charts out there. There's going to be ample bounce opportunities if the market decides to bounce this week. All indicators to me are we're going to see a very nice bounce this week if the geopolitical news or other negative crap doesn't rear its ugly head. So hopefully that'll cheer you guys up so you can enjoy the rest of your weekend. And I will see you all in the chat room on Monday. Have a great weekend. Bye.